folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 9 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night. Let's make it a great 4th, folks. Let's take a look at one of our cards. This is an unknown author. The start to a better life or a better world or a better future is simply to believe that it is possible. Market-wise, let's take a look at it out here. We had the Dow up 20. NASDAQ was flat. S&Ps are up a couple bucks. Gold contract flat at $1,327 an ounce. Silver up 6 cents at $21.18 an ounce. Light sweet crude off $1.19 at 104.15. You get the bonds. 10-year was down 14 ticks at 124.13. 30-year was off almost a point, down 31 ticks at 135.12. King dollar up 3 ticks at 41.90. You had the euro down 24, trading out at 136.55, and the yen up 27, trading out at 101.80. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We're coming into July 4th. You get a sideways market. We did 554 million versus 686. We go take a look at the SPY, the SPY. What you have with the SPY is that we did 48 million shares. Bottom line is that yesterday it did get over the price point of 196.60. You're at 197.23. That high of 197.63, no doubt, can get tested again. NASDAQ Composite. What do you have with the Composite? Composite sideways move today. We're at 44.57. Gold market. We take a look at gold. What we have with gold out here is this. Gold traded today a low of 13.22, a high of 13.33. You did volume out here of 107,000 contracts, and it's going to need more than that. The nice thing is that it is not backing away from these highs, but we are going to need more volume in order to get to higher price, for higher price to hold. Silver, once again, silver was performing out here. Silver got over the highs of yesterday. Volume wasn't bad. We did 40,000 contracts versus 45,000. Silver is basically holding that metals market up, folks, in a big way. Now, let's go over to the bond market. What we had with bonds, you had the employment ADP number come out. Bonds basically went south. But guess what? Not with volume. We did 1 million contracts on the 10-year. That's going into 1.3 million. You're at 124.13. We look at the 30-year bond, 30-year out here, did 324,000 contracts. She's going to go to the lower end of her range, no doubt about that. That's still going into the 451,000 contracts. Now we get a hurricane coming up the East Coast, and with that, folks, we got to get our man, Mr. Andy Hecht, over here. Andy, folks, has an outstanding show on TFNN every Tuesday, Thursday, 3 to 4 Eastern Standard Time. Also a great newsletter, the Technomental Commodity Report. You can test drive it by coming over to TFNN. Newsletters, trading newsletters, the Technomental Commodity Report. Andy Hecht, what's going on?
How you doing, Tom?
Doing great. You having a good day?
Yeah, having a good day.
Those
having a good day. Holiday coming up.
I know.
Well, that's why you live where you live, and I live where I live.
Yeah.
Poor people in the Northeast are going to have a very wet 4th of July weekend. And
particularly after this wicked winter they've had. So it's terrible.
Yeah.
You know?
I mean, it's like it's keying on that coast, huh?
And it's early. It's early, man. This is early for a hurricane coming up the coast, man. There's no.
I mean, the last major storm was Sandy, and now they're going to get another one. I don't know how major this one will be, but you know, it's not good.
We had a lot of action in this commodity market out here today.
Yeah, it's Groundhog Day, Tom. Bonds down.
Yeah.
Dollar up. Gold holding.
Yeah. Yeah.
Same thing as yesterday.
No,
Same formula.
I like that gold held coming into this long weekend. There's no doubt about that, man.
And yesterday, you know, we had that big move in platinum, but today we have the big move in copper.
Yes. No, yeah. And the copper stocks, folks, took off beyond belief. SCCO.
Oh, baby.
Yeah, there was action. Yeah, SCCO.
Good action. I mean, like a key reversal on the daily chart. We made a lower low today, and then we closed way above yesterday's high. We're up around 326 a pound.
Right.
It's kind of a breakout. I mean, you know, I go back. The thing that's killing me about this copper market,
okay,
you know, if you look at it objectively,
yes.
And I have a chart up here. Let me just kind of show you. If you go back to the March 7th high.
Down drop,
It was
yeah.
321. Then we dropped all the way down to 287.80.
Right.
Then right around here, the Chinese bought Las Bambas, a Peruvian copper mine from Glencore Estrada.
That's amazing, isn't it?
And look at what the price did.
And
I think they sold it down to get a cheap valuation.
If you're driving in your car, folks, you know, bottom line, what Andy's saying specifically is that the Chinese bought a huge mine at the lows of the market. And that's not the first time. You know, if we go over to the lean hogs for a second, they bought the largest producer of poultry, right? And that was definitely at the lows.
Oh, hold on. Let me put a chart up. It's going to take a minute here.
Yeah.
If I can put a weekly chart up of hogs. Let's see where they bought Smithfield Foods. Do you have a date in the Bloomberg on that? Let's see what hog prices were when they bought it.
Yeah, I can't pull it up that quick.
You can't pull it out?
Yeah.
Okay. Let me just take a look. I mean, it was about a year ago.
Yeah.
And I reckon that hog prices a year ago was somewhere under $1.
Right. That's the...
And, we're up good 30% here.
Oh, yeah.
I'm just waiting for my chart.
You're talking about 87 cents versus $1.30.
Yeah.
Yeah.
You see that?
Huge.
They are good at buying dips, man. They're very good traders. But, because of their position in the markets as the biggest consumer in the world,
Sure.
they can make it happen.
Right.
We go back a year. Here, I have this hog chart up here. Let's go back. Here we are. Yeah, 87 cents. It even went down to 80 cents.
Right.
In December. And now look, we're just blasting. They did a good trade.
And let's see. So thank you, Z. So we got I get the exact one. It's May of 2013. You gotta love this Tigers then.
Let's see, man. I love them. They're the best. May of 2013.
2013.
Let's see.
Oh my God. What is it? July of 2014 right now. That's crazy. Man, God.
Here it is.
I
90 cents. 90 cents.
There you go.
Between 87 and 90 cents.
Right.
Yeah. Hey, goodbye.
So cattle.
Well, what can you say? Limit up, 155. Right. If you every day you wait to buy those steaks for the cookout on Friday,
yes,
they go up in price.
Yeah. Well, their wholesale's going up. Some of these supermarkets, I suspect, are going to get smoked, man. You know what I mean?
I'm getting
not
the feeling
smoked, but the price. Action.
The profit margin's going to go down.
Yeah, exactly.
Yeah. The one thing that could be a top is I saw like a 6-minute report on CNBC on cattle today.
Oh, good.
So that always portends a top.
Well, when you do start talking about it quite a bit, folks, there's no doubt that, particularly because you don't have CNBC talking commodities, gold and silver, yes, but not the actual. Softs, the cattle, and all of this. So.
Well, they're very reactive rather than proactive.
Sure.
In terms of, they'll react to a big move and they won't pay attention to things, when they're starting. They wait till tops and bottoms.
So let's look at crude oil. So crude oil backed down a bit here.
It's backing off. I think that's on some news out of Libya.
Okay.
There was a report that these ports are opening up and things are going to start flowing. There hasn't been any disruption in the Iraqi crude either. So we're, a little bit of frustrated long liquidation, I would imagine we're seeing here. But I'm not getting too bearish on crude oil here. I agree.
Listen, those spikes that are out there look like they want to get hit, man.
Exactly. We're one news story away from $3, $4, $5, $6 higher.
Yeah.
So, you have to be very cautious in that. I certainly, I would not be short here, crude oil.
Right.
Now, on the other hand, the XLE, let's take a look at that. And I can't pull that up on my chart.
I got it. So we get the XLE. The XLE, folks, is the oil and gas sector. Inside of that, the largest weightings, when you take a look at it, is ExxonMobil, Chevron, Schlumberger, Oxy, ConocoPhillips, Apache, Devron, Transocean, and Halliburton. So,
all these explorers are at highs, and from what I hear, and talking with Dave White, the volume's been very light.
Yeah, no,
so
I
like a short there.
I like the short. They all came off the high, folks. They made the high on the 23rd. They come off the high on the 24th. Big deal. Hey, listen, man, thank you so much. You have a great 4th, safe 4th. And of course,
you too, Tom.
Okay, man.
We'll talk to you next week.
Okay, you stay right there, folks. I'm going to be coming right back with our man, Mr. Darryl Mott. We have the Dow Industrials up 20, NASDAQ down 1, S&Ps are up 2. We're going to be right back.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We had, let's see, you had Ma Bell was up 19 cents. You had ExxonMobil up 21. Oxy was down 26. Big Blue was up $2. We had 3M up 67 cents. And as we do each and every Wednesday at 20 past the hour, let's go to our man, Mr. Daryl Martin. Daryl has an outstanding show right here at TFNN, folks. Every trading day, 1 to 2 Eastern Standard Time. Daryl and I have an additional show on Friday mornings, 10 to 11. Daryl specializes in the Nadex platform. If you haven't test drove that platform yet, come over to our website at TFNN. You can see the banner on the right-hand side. You can hit that banner. bring the platform up. You can open up an account. Costs $0 to open up the account. They'll put $25,000 of paper money into your account. You can listen to Daryl each and every day, understanding how you trade these contracts. There, you hear the ad many times, folks, that your trade is your stop. Daryl Martin, what's going on?
How's it going?
Doing great. You ready for a good fourth?
Yeah, heck yeah.
Oh, no doubt. No doubt.
I'm very ready. Yeah.
That's good. And, so when we go into July, I mean, we're at the highs up here.
Oh, yeah.
And that's basically not only just in the indices, folks. We get oil up at those highs, and inside the Nadex that's right. Inside the Nadex platform, folks. Okay, you can trade indices, you can trade currencies, and commodities. Okay, so it's all out there. And right now, when you're up at those higher levels, if you haven't test drove it yet, get over there and test drive it. Yeah. So. When we take a look at the, particularly, so we have a long weekend coming up. What I've found, Daryl, and this gets really intriguing. So when we get back, the week we get back, folks, more than likely be slow, Monday and Tuesday. Yeah. But after that, you get game on for a little bit here.
It starts picking up, and we got July. We've been talking about the VIX seasonality.
Yeah.
Usually about middle of July is when the VIX actually starts spiking up, which means the market usually starts dropping a little bit, which obviously there's plenty of room for that to happen. So there's magnet prices abounding below us, right? So, I think over the next couple of weeks we'll start seeing that pick up, and then we're going to go into August and September and October, which are, nice, great, volatile months.
Right. And, when we do take a look at the VIX, folks, there is no doubt there's still no fear in this marketplace. Zero.
Yeah. Which won't take much to spook it.
Well, it's amazing. Today, to me, folks and Daryl, it's amazing that you hear, and depending on how long you've been in the marketplace, folks, what tends to happen is this, okay? So we're technical, okay? So we look at the market on a technical basis, on a continual basis. But what happens, which is just really wild, is that if you had patience to just lay low for whether it's a year, 2 years, and all of that, and just wait for these large bubbles to happen, the aspect of whether something's on the front page of Time magazine, whether, as Andy just brought up last segment, he was bringing up that they did a 6-minute segment on cattle today on CNBC. And what happened today on CNBC also, and I heard this 3 different times, right? And this is really, and this is from professionals that have been in the business. And what they said specifically is that, hey, listen, this is beautiful. We can go away. You can go away early on July 4th and not worry about your money inside the market. Folks, God bless you if you've been long in the market, okay? But the bottom line is that you always have to worry about your money in the market, okay? And when I hear that, it's like, whoa, really? Okay, it's interesting, isn't it?
Oh, it is. Yeah. Well, and when you hear that, that's when you're like, sweet, it's about to get crazy.
Well, it is. So, I don't know what the odds are on that, folks, but I can tell you that it seems that it's a continual basis. And you can go back, I don't care, you go back to the 30s, the 20s. When I was in high school in Boston, we have this Copley Square Library, and it's an amazing library, Daryl, right? And I remember when they first brought us in there in grammar school, they have like every paper going back to 1700. And I got really intrigued for 2 different reasons. I got intrigued of the Depression, but I was hunting it at that point for the real estate, okay? Because I was into real estate anyway, even when I was a kid. So I was looking at it, and I was looking at all the streets and seeing how much the houses were on Newbury Street and all these different streets, right?
Right.
And at the same time, though, right, what ended up happening as I'm, perusing all of the papers, I'm realizing years later that some of the quotes that are at the, not the necessary high as 29, but, 6 or 7 months before that were incredible. I mean, they just were incredible, But and nothing's changed. If anything, nothing's changed, And
the highs are insane right now, and really it's one of those, it's really interesting because at first I was a little bit bummed out. I'm like, come on, we need some premium.
Yes.
And, finally sometimes it's hard. You get so used to having that volatility.
Right.
And having that premium that when it goes away, you feel like somebody just, took away all your toys.
Yes.
And
There's no
But
doubt
anyways.
about that. Yeah, no.
And so you have to change your mindset.
Right.
And so I've been, there's been a lot of evolving in my own trading over the last few years, focusing on Nadex.
Yes.
And so what I've really found out is when premium's low, there are ridiculously good trades to be had at very low cost.
Right.
And, I mean, like I did a trade on the air yesterday.
Okay.
And I went in and I risked like $12 a contract. I want to say we did like 20 of them.
Yes.
And so a little over a couple $100 in risk. And made like $1,700 something in the trade. And did it in about 40 minutes.
And what was the trade? Well, it was a currency trade?
It was a currency trade.
Yeah.
It was on pound dollars in the middle of the afternoon.
Nice, okay.
When nothing, like I said, nothing is going on. And let me see here. I know I have it up here.
So what happens, folks, on an ADEX platform, this is something that, you're going to have a few days off. Get over there and bring up the platform so you can see how this works. Seriously, right?
No, seriously. Well, this is it right here. This is the trade. Yeah. Because
what happens in these currency pairs, right, the amount of risk that you can take versus what the reward is spectacular. The platform itself, and in fact, once you get the platform up, Darryl has an analyzer that you want to test drive. And the analyzer doesn't tell you whether to go long or short, folks, but what it does is that it gives you the best contracts to buy for your strategy, which is really dynamite.
Well, and that's what happened on the show. I mean, you can check the archive out there. I went in and I got a spike tracker, basically a volume spike to say the market's going to pull back. And so when the market spikes up, I look for a reversal trade. And I look down and I'm like, you're telling me for like $12 I can get a contract that's 3 ticks away?
Right.
And I had like 40 minutes.
Okay.
Okay, this wasn't like a minute to go.
3 ticks.
Yeah, 3 ticks.
That's all you needed.
And look at this thing. Is that 175? Like, let's see here. I went and I sold the 7157, 1.7157.
Yeah.
And it's at 7158. I'm just now passing break even. I mean, it was right there.
Okay.
And then I hold on to the thing. It goes in, and I actually tried to close out. I had a take profit. I'm real big about set a take profit. I had a take profit at 57. Thing just oscillated, and then went to expiration, which I was actually pretty happy it did.
Sure.
It expired in the money, just barely, but I mean a tenth of a tick.
Okay.
At or below when you sell. Expired at 71,569 on a 71,570.
Was this a binary you did?
Yeah, it was a binary.
Okay, cool.
Yeah,
I got it.
And you can see my payout. It's a live trade. Payout right there, $2,000 on the trade.
Yep.
And like I said, risking a little over $200 on the trade.
Wow.
And I mean, that was a matter of about 35, 40 minutes.
Yeah, that works,
on a few ticks, no stop loss.
It's a beautiful thing.
Yeah.
Listen, folks, you can listen to Darryl every trading day, 1 to 2 Eastern Standard Time right here. And don't forget, all of TFNN. You can get it right on your cell phone, TFNN.mobi. Darryl, have a great one, safe one. Have a great 4th of July, man.
Hey, you too, man. Have a great one.
Okay, you stay right there, folks. We're coming back with our man, Mr. John Logan. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization automation capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We ended out, finish up by 20. NASDAQ was flat. S&Ps are up 2.5. Let's go to Jim in Spokane. Hey, stay, Jim. What's going on?
Oh, not too much. Just enjoying a beautiful day here in Spokane.
Sweet. So what's the weather like now out there?
Well, it's beautiful now. It's blue sky. It's supposed to get up to 94 today.
Wow. That's a great day, man. That's beautiful. Yeah. Totally.
Yeah.
So what are we going to look at?
I want to look at that XONE.
Let's go. It's X1. This is a global provider of three-dimensional printing machines. The low is $24. The high is $78. There's a 30% short interest. So it had quite an expansion yesterday, actually the last couple of weeks. So what are we looking to do here?
Well, I'm looking for an entry point.
Okay, so let's take a look at it. All these 3D printers, folks, got hit in a huge way, in the last 2 years. Well, actually, the last full year. This one here, we went from $78 down to $24. You've doubled up off that. Has juice in it too, by the way. Even on the weekly, I got it on the weekly basis right now. So what you did in the weekly, you came off the low in May 14th, May of 2014, $25. You get some volume coming into the equity, and you can make the case is it a short squeeze because all of them moved. It really doesn't matter because the short positions in them are extraordinary. The pullback, I mean, if you can get this thing back to $35, that would be the number. Because what you have is this. The last run up, let's see, it looks like 14 trading days, we just almost went up 100%. In fact, we did, just short of 100% when it hit the high yesterday. So I just sit there and wait. Where I'm going with this, Jim, is that if you're watching Tiger TV on the 23rd, the 20th rather, of June, that high is 35.16.
Right.
That'll be a natural retracement on the way back. And what you'd love to see is this. So in the natural retracement, you got 1.2 million shares there. You'd like to see it come back inside there with about 900 million, 900,000 rather.
Okay.
And then you'd be shooting for that high. You get a $48.67, folks, and that is a high with some volume in it. And even if it's a dead cat bounce, which it may be, bottom line, it'll go up and test it. And they're all set up like that. You get DDD set up like that, and you get a bunch of the others. So,
okay.
You want to look at JD?
JD, yeah.
JD. So let's see what this is. JD is an online direct sales company in China. Okay. They employ 50,000 people. Oh, my God. Look at that. That's pretty.
Big outfit.
Everything's big in China. The low is 19. The high is 31. And let me just look at this. So, okay. They take in, man, that's pretty intense. They take in $110 billion. So this is a new IPO, right?
Yeah.
Wow. $110 billion. Not bad. Okay, so this is a little bit tougher to give you a heads up on. The reason being is it hasn't traded long enough.
Yeah, that's what I was thinking.
Yeah. I mean, you're at 28. 2280 would be the number. And where I'm going with that, you can see it's almost the first week that was trading. The first day it was trading. You got volume at 2280. You're at a high. You got over, let's see. So on a daily basis, the first high that was established was on June 11th with 6.5 million. You took that out with 12.6, but it couldn't hold it. Yeah, you'd have to wait on this one, man. That's going to be a waiting game.
Alrighty.
Cooking, brother. Have
All
a
right,
great
sounds good.
4th.
Thanks,
Have a
Tom.
safe one, man. Bye-bye. Let's go to Marty in Worcester. Hey, Marty, what's going on?
Good afternoon, Mr. O'Brien. How are you?
I'm doing great. You ready for a good day? Good 4th, Marty?
Yep.
Cool, man.
When it rain, they'll put off the parades and stuff.
I know. What a bummer. And
And the next day.
Yeah, that's right. You gotta grab it all, period.
Yeah.
So you're looking for REGI, Renewable Energy Group?
Right. I'm having a little bit of a conundrum here. I don't want to be chasing it. I want to be able to fine-tune it like you do, and I'm trying to learn this. And with that big candle on the 16th where it went up, I expected it to go down a couple days before that and retest 10, and I had a bid in it. So it just blew that away. And then I figured, well, maybe it'll come back to 1050, and it didn't. And I don't want to be chasing it too far. I've got a bid in now at 1093. It's up against ice and resistance, and it should be coming down. And now I'm looking at it and saying, how far down is it likely to come? Is it going to go back to the 1053?
I like it, man. I got to give you a show, Marty. You dissected and bisected that. Really cool, man. Okay.
Well, I'm learning from you.
It's a beautiful thing, man. So let's take a look at it, folks. The low's 851, the high's 1650, and, there's no doubt what Marty's talking about here. So, first off, you're absolutely right. You're going to get a chance to get this at 1092 or 1032. I can see, right at that level. It's coming into what stopped this, even with the juice, Marty, up here on the 27th.
Yeah.
So, is when you go over, if you're watching Tiger TV on the 28th of February, you see the low of the 28th is $11.53.
Uh-huh.
And the volume's 2 million shares.
Right.
That supply line there is stopping that. And, well, it would make sense also, though, because, you went from 975 up to, 1167. That's a big move. Let me just put this on a weekly. Yeah, just take your time with this. Oh, this is cool. I see what's happening. Okay, so, yeah, you're going to want to be in this. I can see what he's doing here. So, what this has done, folks, is this. May of last year, That's when the break went topside. The bottom of that break was 923. The top is 1205. Weekly volume, 6.2 million. We came back into that the week of December with 4.8, and then we came down, look at that, amazing, 4.9. So the correlation is 4.9, which was the week of the 6th of June, going into that 6.2. So use that benchmark, Marty, of that May 3rd, that's the initial break topside.
Yep.
And every time that you come back into that and you get it back in with lighter volume, that's what we want to buy. And you are going to need a lot more volume to break through, though, this 1150 area. Because, see, when I get this, well, I got on the weekly, and you can see on the weekly, the bottom of that is 1127.
Yeah.
It's hard. It's having a hard time getting into that supply line. If we put this on a monthly, interesting. Yeah, you still want to buy it. We put this on a monthly. What you have is this: there's a huge amount of volume. Both how it came down off the high from 599 to 1060. That was in October, and then November. So October we did 13 million shares. November, 20 million shares. But last month, we did 16 million on the way up. And that's a good beginning to get rid of that supply line. So your patience is going to pay off. Just do not chase it. And I can see why you put that 1092. With the 1092, folks, is this. That's the high of the bar when we had the wide price spread accelerated volume on June 16th. And yeah, I just sit there and wait, man. You know, the way this traded out here today, it couldn't get into its high, close it at lower level. You know, went to 1162, closed it lower, and that's saying that, hey, you know, you're going to pull back a bit.
So you're thinking that 1092, 93 is about right?
It's about right, and you know the drill, as long as the volume does not expand. If the volume expands, as it's getting into that, all what will happen there will go to the bottom of it, which is 1032.
All righty.
Cooking, man.
Thank you.
Have a great one, Marty. Have a safe one. When we look at the markets out here, folks, okay, the XLF, we go to the XLF for a second. XLF, sideways move out here, you know, down 2 pennies. You did 17 million shares. IWM was interesting here. The reason being is that the IWM, folks, failed yesterday on price and volume. It got over the 120.58. That was the high of March 4th. Closed underneath it and basically start moving slightly lower today. We're at 119.10. The last time that the IWM failed, it went from 120 straight down to 109. So we'll see where that whole baby does shake out. SPY hasn't failed yet. Bonds, they had pulled back. The pullback there was on lighter volume as to what they're going into. King Dollar, what we did with King Dollar out here, she had come back down into the May 9th and May 8th break. Well, come back down to the May 8th and May 9th. May 8th is where the dollar came off the bottom last time. Wide price spread, accelerated volume. We went into that. We tested it. We had lighter volume. It rejected it. That was yesterday. We did 15,000 contracts out here again today. We'll see if the dollar can get a bunch of juice, meaning wide price spread, accelerated volume, as that baby tries to move into higher price. What we definitely have out here is that the long weekend, you know, I suspect tomorrow, even with the jobs report, it's going to be a flat market. Jobs report from out today, it was good. This Tom O'Brien says TFNN. You stay right there, folks. We're going to be coming back with our man, Mr. John Logan. We had the Dow finish up 20. NASDAQ was flat. S&Ps are up 2.5. We're going to bring it back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman wave sequence. Using the Chapman wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment Report is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Tom O'Brien.
Welcome back, folks. The Dow finished up by 20. NASDAQ was flat. S&Ps were up by 2.5. And each and every morning, folks, at 8 a.m. Eastern Standard Time, my man, Mr. John Logan, he has a free daily video for you. It's on the right-hand side when you pull up TFNN. They're outstanding videos. It's the TAS Market Profile Research videos. If you haven't checked them out yet, they're absolutely free. Please come over each and every day. Today, you had the S&P up there. Sometimes you have the S&P, you have currencies, you have commodities, all of the above. Now, as you're at TFNN, what you're going to see in the carousel is that you're going to see the TAS signal box. It's a great piece of software, folks. You can hit the banner, and what you're going to see right there is that bring you over the page, and you have a couple of videos there. John's done a great job with these videos explaining exactly what you're looking at, whether you're looking at the commodities, indices, currencies, or the S&P 100. You can test drive it right here, right now. John Logan, what's going on?
Hey, Tom, good to be back with you. How are you today?
You also. It's great, man. You ready for a good fourth? Well, oh, man, you must be hunkering down. Are you in North Carolina right now?
Yeah, I'm in the land of deliverance, as you call it. I still haven't gotten over that yet.
Yeah, but I guess you're going to get a little storm, right?
Yeah, we got something coming up the coast here. Everybody's nailing stuff down, but it's not supposed to be bad. I think we're supposed to have maybe a 3-foot storm surge.
Okay, I hope it's not, because that it's bad. They're always bad, but on a good holiday weekend when everyone's off, it's not a good scene.
It's going to crush the spike in the economy down there that they really count on this time of year. It sucks a little bit for those folks.
Because that's Outer Banks, man. All those great fish on those Outer Banks, and that's pretty intense.
People don't realize how good of an area that is. I mean, the Gulf Stream's only about 10 miles offshore a lot of times, and you can get on a boat and just get out there and catch tuna. It's a cool spot.
Huge. I've seen plenty of pictures. We got plenty of tigers that are down there that basically camp out there. I remember a couple of them, they used to always send pictures. We used to actually post them. They have the truck on the beach with the camp and with those rods right in the water, man. Do you know what I mean?
Ocracoke Island. I was almost going to teach school out there after college.
Really?
Yeah. I was in love with that place. Still am.
That is so cool, man. So, let's walk through, and folks, each and every trading day, right before at 8 o'clock in the morning, folks, what you have is that John puts the video up. So let's go through the video from this morning, because we have the S&Ps up there, right? The ever-ready bunny, right?
Oh, God. You're going to make me talk about the S&Ps? Oh, God. Here we go. Basically, I'm looking at the S&Ps and the notes, which are such a disconnected situation as of lately.
Yes.
As we know, I mean, if somebody's been in a cave for the last couple of years, there's a bid in the 10-year.
Right.
And that's called the federal government. And, we really can't fight that. And that is a good, backstop for a stock market, obviously.
Yes. And
fundamentally speaking, that's kind of the way the ball bounces. Technically speaking, we've tried to find reasons. I listened to Daryl Martin earlier. I mean, the VIX is low. It's volatility. You kind of count on that, and it's not there right now.
I know. Right.
And you never know when it's going to pick up. And,
right.
And, you want to buy premium when vols are low, and theoretically sell premium when vols are high, except in 2008 when they get higher.
Yes.
But as we look at these equations, we try to find battle points, and that's basically what these profiles do for us. Is we try to find areas of high probability, inflection points, if you will, that are going to be ripe to either go long or go short.
Sure.
And I'm looking at what you got on your screen. I'm looking at the S&Ps, obviously. It's something that, when we talked this morning about, and I've got the notes up right now on my screen. Let me pull up the S&Ps. We talked about that now the new level, if you will, is around 1960.
Okay.
1958. And we talked on the video this morning, the crowding action. We had pulled back to the bottom of our most recent profile,
right,
which is around 1939.50. This was what was that, a couple of, like, last week sometime?
Yes.
And we went a little lower, and then we got back in that profile, and then we started lurching forward, and we talked about the previous unfair highs around 1947, 1950. We have a POC, a point of control, in our current profile that's at that same general area. So we've got some, we had to kind of either use that as resistance to go back and retest the 39 area.
Okay. Or
we had to close above there and then look at the next inflection point, which was 1960. Obviously, that happened because we did get a close above 1947, 1950. I was personally battling that for a little while, as a small trade.
Right.
But as we closed above, then as we see this crowding action in general, as these S&Ps kind of get tighter and tighter and don't want to come off these inflection points from above, 1960 was a foregone conclusion. Then we obviously had that as a launching pad. We weren't selling that 1960 area just because the fact things on their highs want to go higher. Right. And when we have new all-time highs, these things, it's not like there's a free trade, everybody in the world sees it. Hey, let's everybody go short. We're at the highs again. I mean, it's something where it usually stops people out at the very least who are attempting to do that short. That's the sucker trade, basically, is what I'm trying to say.
Yes.
A lot of times. So 1960 now is going to be support for the S&Ps, and if we happen to, and any pullbacks to that area, even though we do have some overextension starting to show again on our navigator, by default, just by turning the rents the same way every day, now that we've broken out among profiles again, have to be bought. If we get some movement down below 1960, that's going to have to be a stop-out trade and a possible reversal to go back and revisit 1939 and even lower possibly. But right now, you got to look at this very black and white, take the emotion out of play, and look at those levels in particular.
Yeah,
I did a little reference to the 10-year this morning in that same video because I wanted people to see that this 124 area on the 10-year. We're talking about the price of the note instead of the rate. They're inversely related. I know you've talked about that on your show before.
Yes.
The price of that note at 124 is the ultimate support area for the 10-year. Now we haven't even we talked about 124 and the 124.06 this morning. To actually trade that from the short side back into support on a contra trade. But that 124 area is going to have to hold. And to be honest with you, it probably will hold because if the market happens to, the stock market happens to turn around a little bit, that somehow there's a fear in the note market or the federal government that, hey, we need to keep rates lower if the market ticks down a point.
Yeah, no doubt. Listen, folks, you can come over to our website right at TFNN, go to the front page, try the Taz signal box right here, right now. John, you have a great Fourth, safe Fourth, and looks forward to speaking to you next week.
Yep, you too.
Have a great one, folks. Always remember, whatever you think about, you bring about. Whatever you focus on grows. Have a great one. Have a safe one. Look forward to speaking right here tomorrow, folks.